Welcome back to Trades and Gains, everybody. I'm your host, Max Pitts, and this is the only place where we admit the market is confused, exhausted, and, well, still somehow priced like everything is awesome right now. It's like that one song, everything is awesome. I'm so awesome. Anyways, it's the end of January. You know what that means? Wall Street's New Year's optimism is about as gone as your motivation to actually keep that promise to yourself that 2026 was going to be your year and you were going to get in shape. Earnings season is here to, well, ruin relationships. So, hey, divorce lawyers, mount up. It's time to start making that money on. And the Fed is back to reminding everyone who actually runs this horse and pony show. All right. This is the busiest week of Q1. We have big tech earnings, a Fed meeting, metals going parabolic, currencies acting weird, and investors doing that thing where they say, this time is different. You know, like that cheating ex-boyfriend who slept with your sister on prom night. But the difference is they're nervously refreshing their portfolios every 5 minutes. And just to be clear, just like my pee was this morning because I'm that hydrated, if you feel uneasy, congratulations. That means you're actually paying attention and don't have your head up your ass. Anyways, let's go ahead and rewind to last week, shall we? The S&P 500, well, it was flatter than your girlfriend. The market equivalent of basically shrugging. The Dow, it was down 0.7%, and we like to just call that rotation fatigue. It's like a white girl when she tries to throw it back. The NASDAQ was slightly red because, well, AI doesn't fix the geopolitical environment. Sorry, not sorry. But the real story wasn't stocks. Natural gas, and no, I'm not talking about my farts, exploded 75% in a week, baby. Now, why? Because winter showed up like, hey, remember me? And also, we are in like the middle of a snowstorm. I'm literally recording this in a snowstorm. Can you believe that, bro? Pretty crazy. But this is a reminder. Inflation isn't gone, baby. Energy never stopped mattering, and Mother Nature doesn't care about CPI narratives. I best believe that, all right? Wall Street spent 2024 telling you inflation was transitory. January 2026 said, yeah, that was cute. That was cute, baby. Now, the next thing we had was Davos. You know, again, I think they need to run this economic forum out of a third world country so they could really understand the state of the world. Because, you know, Davos, billionaires, private jets, supermodels that are willing to ruin a marriage, speeches about cooperation, and, well, zero accountability. Trump in Europe reached a quote-unquote framework on Greenland, which is diplomatic language for we paused the fight so markets wouldn't freak out, or at least would stop freaking out. But here's the real tell. Currencies, well, they're moving. The euro's up 2% versus the dollar. The Swiss franc is ripping. The yen is strengthening. That's not growth optimism. That's capital hedging instability. For decades, crisis equaled buy dollars. Now, crisis equals buy gold, silver, francs, anything not tied to U.S. politics. That's a structural change, and Wall Street, well, is pretending it's just noise right now. Which, let's talk about a very toxic trait. Like, come on, queen, know your worth and get it together. Now, this week's Fed meeting is easy on the surface because that's another thing we have coming up, right? Rates are going to go unchanged. There's no pivot. There's no drama. But the real story is what happens after Powell. The Fed chair race is heating up. And no, I'm not talking about heated rivalries, but Rick Ryder, you know, hopefully Rick knows how to ride. Well, his odds are surging. Kevin Warsh, he's fading into the distance like the old white man he is. And Kevin Hassett, well, I think he's barely alive in the race and just barely alive in person because, oh my God, let's go ahead and look at what Kevin Hassett looks like. Anyways, like, come on. This is not a man that protrudes happiness. This is a man who just came to tell you that your son died at war. Anyways, markets, they are sniffing out a Fed that may care more about markets. tolerate higher inflation, and blink faster if assets wobble. That matters a lot when valuations are this stretched. Yes, this stretched out. Now let's talk about the main event. This week, we got some big tech earnings coming into the framework, babes. All right, let's go ahead and talk about it. This week, we got Microsoft, Meta, Tesla, Apple. And here's the twist. Nobody cares about earnings beats anymore. The market wants to know, how much are you spending and how long can you keep doing it? Numbers that should make you uncomfortable. Meta, $70 to $72 billion capex. Microsoft, more than $88 billion. And the tech sector, $700 billion in investment grade debt issued last quarter. That's not innovation. That's panic disguised as confidence. Every CEO is basically saying, trust us, this time the spending pays off. And historically, well, that sentence has never really ended well for anybody, especially in finance. Now here's where and what Wall Street glosses over. AI is not just software. It's power plants, water, data centers, political backlash. Data centers are now colliding with utility bills, environmental regulations, local voters who don't want their water rates doubled. This is why defense stocks are working, energy infrastructure is ripping, and hardware is over software so far in 2026. AI didn't kill the economy, it rerouted capital flows. Now let's talk about what's actually leading though in the market, because you probably care about that. Gold, it's near 5,000, silver's over $100, platinum's up 30% year to date, copper is grinding its way higher, and lithium's up 44% year to date. This is not fear, it's a hedging reality. Gold isn't bullish because people think the world ends tomorrow, it's bullish because debt is exploding, currencies are fragmenting, governments are weaponizing trade, and AI needs physical resources. When capital stops trusting promises, well, it goes ahead and acts like your ex-wife and just buys stuff. So this is not a crash setup. This is what we like to call a regime shift. Yes, I know that sounds very dictatory, but the only dictator here is me on my channel, where we do what I say. No, I'm just kidding. I kind of do whatever you guys want. Anyways, the market is moving from growth stories to balance sheets. Oh, who told you that a long time ago and you probably didn't listen to? This guy. Software hype over hardware reality. Oh my God, it's like all of my predictions for 2026 have come true. Buying everything to prove it. Another one. I'm 3 for 3, babes. Leadership is changing quietly. Small caps, well, they're tied to real assets. Energy, metals, defense, select AI infrastructure, not the whole tech complex. This is how bubbles deflate without popping. The story of 2026 isn't a collapse, folks. It's discipline returning. Earnings matter again, valuations matter again, and macro matters again. This is no longer buy the dip and shut your brain off. This is know what you own, or the market will remind you. And trust me, it always reminds you. Anyways, that's what we got for the weekly outlook this week. Make sure you subscribe to Trades and Gains. This is also powered by Investor Central Club. Use the code SUPERMAX for 20% off your first month at investorcentralclub.com. The best options flow software on the market. Anyways, like, comment, subscribe. Leave your hottest take in the comments of what earnings you're looking forward to the most this week. And I'll catch you guys in the next video. Have a happy Sunday and stay safe out there if you're on the East Coast. Love ya. Mwah.